What's up everyone, it's Scotty with Motivesting. So I wanted to do a video going over this timeless lesson which will forever, I promise you this will forever stay with you in your investing and trading journey. So if you understand this one thing, it'll really help you evaluate situations differently and also identify opportunities when they present themselves, because sometimes it becomes obvious, sometimes maybe doesn't, but the times when it doesn't, you just have to take a little bit of a step back and really understand what the numbers are telling you and not what the sentiment's telling you. So this is a great case study because, see, the thing is, you can learn so much, but you can only learn a lot if you go back in hindsight and understand what the decisions were made, what type of decisions were made back then versus what the outcomes ended up being. If you don't do any of those analysis, you're not going to learn, right? So that's why I wanted to go back 1 year, 8 months, 12 months ago, and better understand what happened with respect to sentiment, and of course, where we are today. So I hope you guys enjoyed this video and find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel if you're just joining us for the first time. Link to our Discord and Patreon is going to be down below. There is a 16% annual discount that's available till the end of this month. You get access to all the buy and sell alerts by joining our Discord, a lot of other benefits, including private videos and whatnot. And of course, we also do have the flash sale right now going on for our options course, coupon code LAUNCH, for a 50% discount on this course as well. So that's going to be available for you to access with the links down below. So the company that we are talking about today is going to be Meta Platforms, right? So Meta Platforms reported their earnings and the stock popped over 6%, and it's now trading at a little bit over. So let me just take a quick look here. It is now trading just over $319 per share, which obviously is a very substantial move to the upside. So this right here is going to be the chart. And again, you can see that after hours up over 6.7%, $319 per share. And when you take a look at the all-time highs, which for Meta are going to be sitting roughly at around $380, it is only about 17% away, 19% away from its all-time highs, meaning another 19% rally, and we're trading at all-time highs. Now, this is where the case study begins. This is why the case study is so important, because I was going through some of the comments and some messages and some other things from 6 months ago, 8 months ago, 12 months ago around Meta, okay? And I'll go over exactly what I mentioned back in October in our Discord. Again, everything is timestamped, so you know that I'm not making anything up. It's literally there. It's part of the record, and you can go back and check that for yourself. But this right here were some of the comments from a year ago. This person, again, I have nothing against, again, I'm not bringing these up to bring them down or anything, but I'm bringing this up as a learning lesson because this is a case study, right? We've gone through the entire process, and this is just one example. We've gone through the entire process with so many companies so that it's important for us to learn from these things, right? I'm still learning every single day, and it is very, very critical. And these are timeless lessons that will stick with you forever. I promise you that. So this person mentioned 1 year ago, dude, Facebook is dead. You need to learn when to let go. This person mentioned, I told you a while ago, it's over for Facebook stock. This person, one of my favorites, mentioned Meta is going to zero. 9 months ago, Meta is going to zero. This person mentioned, this actually is a good one. This is my favorite one. This person mentioned Meta under $90. Hard not to roll the dice at those prices. That's smart because the risk reward is very good. So whoever, if you're watching this video, Hot Rod 3769, it's quite an interesting name. That's a very good analysis from a risk reward standpoint. But look at the reply of one of the members there. LOL, I wouldn't touch it ever. And then they responded in a different comment saying, Meta is dying, Caddy. I know you don't remember Yahoo or Nokia. You were too young. Do you remember eBay? They were supposed to be the next Amazon before Amazon. And bottom line is that Meta is dying or is dead or is going to zero. And these are all comments from like 8 months ago, 9 months ago. They're fairly fresh, right? It's not like 5 years or 10 years or 12 years. These are like fairly fresh comments, literally less than a year ago they were made. This is my post from October of last year. So October 27th, 2022. I did a video going over Meta's earnings call. And I also remember, like, I remember this specific day, like back in October, I was actually in Europe. And I remember this very specific day when I was going over this Meta earnings, and you can see how my time says 2:33 in the morning, 2:33 a.m. I remember that because I was in Europe and I was doing this live stream. I was super stressed about Meta because the sentiment was so weak. This was probably in my Meta position timeline. This was like the lowest point I ever was in this company, in this stock. Like this was the lowest point. At 2:30 in the morning, I'm like listening to this earnings call, trying to figure out what the management's gonna do with the company. It was like a really, really bad time. And I remember, again, I remember very precisely, the comments did not help. The comments did not help at all because it was the same thing. In the live chat, it was same comments. I'm sure if you go back to the stream and look at the comments, it was all Meta's going to zero. Meta is a dying company. Facebook, who even uses Facebook anymore, right? It's all going to go down. It's going to zero. It's going bankrupt. Like it's all that narrative getting pushed out in the comments because the sentiment was so bad. The sentiment was so bad. So, on that same day, 6:28 p.m., I pretty much mentioned in our community that I will be doing a private member-only video on a Meta earnings soon. And the reason why I wanted to do private members only is because I knew that the members only, there will be a much better analysis and exchange of ideas as opposed to if I do it a public video. And mentioned that I will be going over the key takeaways from the earnings call report and share my thoughts. And I precisely mentioned that it's not as bad as the market is making it look like. The sentiment on the stock is about extreme bearish as it can be. You ask anyone and they'll tell you the Meta stock is dead or it is going to zero. Those were my last final words back in October on Meta. So Meta, October 27, 2022 is when that analysis came out. So if you basically come back over to the chart for Meta, you'll notice that this right here, November, October 27th. This is where we were. And I mentioned this is about as extreme as it gets from a bearish standpoint. So the bottom line is that we have to differentiate between the company and the stock. They are not the same thing. They never are. They never will be. And here's my lesson for you. Figure out a way to always make that distinction. Because when you're investing in the markets, sentiment plays a huge role. It plays a significant role with what prices do. But at the end of the day, all that matters is the quality of the company, the value of the company. Like Warren Buffett says, right? In the short term, markets are like a voting machine. In the long term, they are a weighing machine. And that's exactly what happened when the stock was selling off. It was a voting machine, right? Everybody was voting down on Meta. They were writing them off. They were like, yep, this company's done. It's going to zero. They have no idea what they're doing. Facebook's dead. It's a voting machine. But we understood, right? And again, I'm not saying this to brag, but it's a lesson to be learned here. And look, I've made some wrong decisions too. I'm not perfect, as I've said before, but it's important to make that distinction that when the company fundamentals continue to be strong, if the company is moving in the right direction and the fundamentals continue to be very good, you have to make that distinction between the stock price and the company. And our confidence, our thesis is on the company, not the stock price. Always remember that. You're analyzing the company. Your investment thesis is on the company, not the stock price. So yeah, I mean, that's quite an interesting roller coaster that I wanted to kind of, bring you guys on. And if you take a look again, 19-20% potential upside needed for it to be back at all-time highs. And Meta, obviously one of the best performing stocks of 2023, up over 241% from that point forward. And this comment really just wins it because this person mentioned Meta under 90, hard not to roll the dice at those prices. And this person says, lol, I wouldn't touch it ever. And they missed out on 241% of that rally when it was at $88, like literally just under $90. Can you believe that? It's crazy. But anyway, going over to the actual numbers here, Meta with a banger report, beating expectations, EPS coming in a little bit under $3, up and higher than what the expectations were. Revenue $32 billion versus 31.1. DAUs growing to over 2.06 billion. MAUs growing to over 3.03 billion. Average revenue per user growing to 1063. And of course, we got revenue increasing 11%. And the forecasting was 32 to 34.5 billion. And the guidance was 31.3 3 billion expected. So they came in, beat on EPS, beat on revenue, beat on DAUs, beat on MAUs, beat on ARPUs, and beat on guidance from the company. Hence, absolutely deserves a 6% pop after hours. We had a good quarter is what Zuckerberg said. We continue to see strong engagement across our apps, across Threads, Reels, new AI products in the pipeline, and the launch of Quest 3 this fall. Net income rose 7.79 billion, 298 from a year ago, 6.6 billion or 246 per share. And total cost expenses were 22.6 billion, which were increasing 10% from same time last year. So overall, very strong numbers and becoming more efficient. Cost saving plans that resulted in about 21,000 job cuts, and the plan appears to be working as well. So they're moving in the right direction. Now, that being said, the valuation certainly is a little bit more on the higher end now, but I think the sentiment enough can be strong to keep Meta on this uptrend and, of course, bring it back to potentially all-time highs at well over 350s. 350 is going to be that next target and that resistance to watch for Meta all the way up to $380 per share. So not a lot to go over here, but yeah, it's been one hell of a ride. Again, I do apologize for the word here, but it's been crazy. So congratulations to anyone who was brave enough to take advantage of those deals. Again, I really want to congratulate you guys if you did take advantage of that low prices and were able to profit on this Meta rally. So, as always, happy investing. Make sure that you drop a like, subscribe to the channel. Link to our Discord, Patreon is going to be down below. Coupon code LAUNCH for that 50% off. As always, happy investing. I'll see you all in the next video.